Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe. It is Monday, the 19th of January. Starting off with the FTSE 100 on what's supposed to be one of the most depressing days of the year. The market obviously down. Here you can see that we're back in that rising trend channel from February last year. The nominal top of the channel there, 102 or 10,200 rather, and the initial support could be the initial January resistance there, 10,160 or 10,158 to be precise. End of day close below that, we've got the risk of heading back down towards the 10,100 level, but not expecting worse than that at this stage on the basis that Trump normally chickens out or whatever crackpot scheme he comes up with. More negative, though, is the way that we've had higher highs in recent days, but lower RSI trace, or at least bearish divergence, and that does suggest or could suggest that we head back down to the 10,000 area, even if we then head back up again. End of day close back above 10,200 required to get us back on track for that the October rising trend channel target of 10,500 by the end of next month. Moving along to the DAX, and here you can see that we've gapped down, but we're still above the old 24,700 resistance. Hopefully that'll come in as new support. While we're above that on an end of day close basis, still looking for the top of that channel there, as high as 25,800 from back in May, and looking for that hopefully over the next 2 to 4 weeks, given how slow the DAX tends to be these days. Worst case at the moment is a test of the initial December resistance, 24,500. Moving along to the Dow, which is obviously out of sync with the other markets because it's still asleep, but got this range between 48,800 and just under 49,700, let's call it. We need to see a break of that range to give us a break through the 50,000 zone, and more importantly, a move up to the top of that rising December trend channel as high as 51,700 by the end of next month. If we do break down, then the favored zone would be the 50-day line there, 47,900, but not really expecting anything lower than that. The next situation is the one of Bitcoin, and here a bit disappointing in the sense that we've had clear bull trap through post-November resistance at 95,000. Below that, we've got the risk of a test of the 50-day line, 90,300. And if that goes, then it would be the old October 2024 uptrend line at 86,000. But at the moment, probably favoring the 50-day line there at 90,300 is the worst at the moment, and need an end of day close through 95,000 to give us a potential move up to the 200-day line at 105 as soon as the end of next month. Ethereum also in a slightly weakened situation with the bull trap through 3,300. The risk here is a test of the 50-day line at 3084, and then the April uptrend line 2920 is a worst case scenario target. RSI still above neutral 50, so we could dig ourselves out of trouble. End of day close through 3,300 could give us the 200-day line 3661. On to gold, which has been the star performer, obviously, and here you can see that we managed to find support above old December resistance of 45.60. Above that, looking for the top of the channel there from November 2024 at 48.20 now. Looking for that by the end of next month. Worst, I suppose, at the moment is the rug pull down to the floor of the channel there, the black line, 44.20, let's call it. And but hopefully that would be a potential buy opportunity or buy on the dip opportunity. Moving on to the stocks, and starting off with one of last year's better performers. Here you can see ACG Metals, a little gap up again today. We've got this bull flag between 1250 and 1350, an end of day close through 1350. We're looking up to 1525, which is the top of that rising trend channel from back in April. Looking for that by the end of next month. Worst case at the moment, we need a test of the old October-November resistance around 1180. Next up is Ajax, which hopefully could be the next ACG. Here we've hit the top of that rising trend channel from back in October again. We're looking for the 14 pence by the end of next month while we're above 10 pence. So we've gapped up through 10 pence today. And worst case, we've got to test the old target here at 8.75 before heading up to 14 pence. Never liked looking at Amigo because it's been a rather tortured story in terms of the fundamentals, but at least in terms of the technicals, the feeling here that the shares could head higher has been correct with a V-shaped bull flag, and through the recent resistance at a penny, can head up to 1.4 pence as soon as the end of next month. Ideally, we stay on the right side of the previous target, 0.85, after the recent RSI 50 plus rebound for this market. Don't often look at this stock, actually, Ampeak, but here it is today. Rising trend channel there from back in August. Top of the channel there, heading for 4.4 pence, and we're looking for, while there's no end of day close, back below the 50-day moving average at 3 pence. Amala is next, a stock which I haven't looked at for ages, but it looks like we might have a breakthrough in terms of the recent resistance line there. You could argue exactly where it was, but above 0.11. Now looking for the top of the broadening triangle there from October as high as 0.17, and looking for that by the end of next month or even sooner. But RSI backing there as well, an uptrend line in the RSI window. So while we're above 0.11, feeling quite chipper that there could be a move to the upside, a further move to the upside. Moving along to a stock which has hit its target at 26 pence. On the nose, in fact, the top of that channel. That was our target when the shares broke a resistance line there from back in December at 14.5 pence. It's funny how nobody's congratulated me on that call, because obviously they're so amazed that it actually happened. But at end of day close above 26 pence, could be looking at 37 pence, which is the upper parallel of that rising December trend channel. Ideally, now there's no price action back below 23 pence, the old December peak. Lots of Colin Bird stocks coming to life at the moment. He's finally had his day in the sun, or having his year in the sun, hopefully. Here you can see that we've got a rebound off the floor of the rising trend channel on the Kendrick chart at 0.24, and above that looking for the top of the range and the top of the channel at 0.46 by the end of next month. Kodal continues to recover and recover well. We've hit our second target there now at 0.56. Above that, looking for that Lilac resistance line projection, possibly heading a bit higher than I've even drawn, up to 0.73, and looking for that by the end of next month. Ideally, we stay on the right side of 0.55, whatever happens on that. If Colin Bird stocks are doing well, so Jason Brewer stocks as well. And here we have NEO with the rebound and gap, two gaps high now above a rising 50 and 200-day moving averages, above both of them rather. Here you can see the top of the range is a penny plus. We're looking for that by the end of next month, especially while we remain on the right side of that 50-day line, 0.75. Orosur, probably one of the best prospects at the moment. Steady performer, rising trend channel there. Top of the channel there, heading towards 42 pence. We're looking for that while we remain above recent resistance at 29. Tertiary minerals next, and here you can see that we've hit the second target there, 0.11. Above that, looking for as much as 0.17, which is a resistance line projection from way back in the summer or the spring of 2024. Upside value while we hold above 0.10. Interesting moves at Union Jack Oil, if you believe the rumors and the rumor mongers. Here you can see a broadening triangle base, top of the gap there from November, 3.75 pence. We're looking for that by the end of next month, while we remain above the 50-day moving average at 2.75 pence. That's it for me today. More updates tomorrow.